This is your financial dashboard. It's basically your entire financial life in one clear picture. It takes about 30 minutes to put together, and if you have no idea where your money's going or your finances are a mess, this is one of the easiest and best things you can do right now to fix that. The way you build it is with your 5 financial vitals. So in the same way the doctor checks your heart rate, blood pressure, and other things for your physical health, there are 5 key vitals for your financial health: income, expenses, assets, which are cash, investments, and things you own; liabilities, like credit cards, other debt, and things you owe; and your goals. The first 4 show you where you are right now, and the 5th, your goals, shows you where you're trying to go. Once you have everything together, then you can start being smart with your money, mapping out the best way to use it based on what you're trying to achieve. So I'm going to show you step by step how to fill these out, and we'll start with your income. Oh, and if you don't know where to download these, just go to wakeupfreely.com/dashboard and you can download your templates for free. All right, for your income, you'll put your company and job title here at the top. So I have some examples to walk you through. Let's just say you are a project manager at XYZ. Here you can select how often you get paid and how much. Now this is your gross income, the amount that is it's the largest amount of money on your paycheck if you're a employee. So I have as an example here $2,500. It'll be listed as gross income possibly as well. I don't know if I said that, but that's another name for it. If you get paid bi-weekly, select bi-weekly. If you get paid weekly or on the 15th or 30th or monthly, you can select those, and the stuff on here will change accordingly. So if you got paid weekly, then it'll show that monthly. You get paid roughly 4 times. And so that's how much you're making for the month. Keeping in mind that 2 months out of the year, if you're paid bi-weekly, you'll get 3 paychecks. If you're paid weekly, you'll get 5 paychecks. So there's something to keep in mind. Next is your pre-tax deductions. It's super important to know what comes out of your paycheck before your direct deposit actually hits. So if you have health insurance, let's say it's $90, dental is $30, optical $20, and for your 401k, we'll say you contribute $400. For taxes, it will be segmented. If you're an employee, you'll have, and in a second I'll show you what you can do if you're a contractor, like you freelance or drive Uber, etc. But for your taxes, it'll show you line by line how much you pay for federal, state, Social Security, and Medicare. That might be listed as different things. Sometimes it's listed as FICA. But in any event, to make it really easy, just add up all the taxes and put it right here in this box. If you want, at some point I may just, you can insert a row and itemize those taxes as they appear on your pay stub. So you could just put federal, state, et cetera, et cetera. Well, you wouldn't put it here, but for now, I like to just have it as one big chunk, or I think it's easiest to just start that way. For after-tax deductions, maybe you have a Roth 401k. If you contribute to that, in this example, I'm not putting anything, but you might have something, or an HSA. If HSA is after tax, I think it's pre-tax, but in any event, your direct deposit will reflect your total gross income minus all of your pre-tax deductions, minus your taxes, minus after-tax deductions, and it gives you this direct deposit. This should be what hits your bank account every time you get paid, give or take maybe $1 or $2, something like that. For your total monthly income, again, based on how often you get paid, that's what's going to show here. And this is your take home, direct deposit, what money you actually have available to do stuff with. If you have a second income or your wife has an income, you can put that here. If you have a side hustle, you can also put that here. And just for the sake of, to show you, if you drive for Uber, they won't withhold taxes for you, and this will change the amount that you get paid. So you can just put an estimate. So let's say weekly, maybe you make, $100, so it's $400 for the month. You'll put 0 for taxes, or you can put how much you need to set aside for taxes. Let's say it is 25%. So I might just say equals the paycheck amount times 0.25. So putting aside $25. second direct deposit is $75. In reality, it's $100, and you would have to move that $25 in estimated tax payments to a separate savings account, ideally. So monthly is shown here, and total monthly increases by that $300 monthly. Now, if you don't have a second income, you can just delete all this, highlight from G. I'm holding down Shift and then selecting column M. So I click G, Shift, select M, right click, and delete those columns. Now, only thing that's going to happen is this basically shows up as an error because in this little formula box, it's trying to add something that's not there. So you can just delete plus the REF, hit enter, and it'll fix it. That is your income. Shows you exactly how much you're making from top all the way to the bottom. And actually, this should be before. Okay, next is, and then it appears here on your dashboard. That's the beauty of this, is that it all sort of links up after you fill the information out. Next is your expenses. Super important to know how much it costs you to live every month. And I like to break it up into these three primary categories: recurring, needs, and fun. So recurring is all of the expenses that you pay for on a consistent basis every month, typically in the same amount, and it will most likely come out of your bank account automatically. So examples, let's go through. Rent, type in here, rent, all of your utilities, subscriptions like Netflix, Spotify, gym membership. Again, everything that you pay for on a consistent basis in the same amount comes out of your bank account, generally speaking, automatically. I recommend, if this is your first time going through this, just brain dumping all of your recurring expenses before you even go and enter the amount or the pay date, just to get a head start and make it really easy for yourself. So I have examples here: car insurance, car payments, gym, Netflix, Spotify. Amounts: $1,200, $20, $40. I have these listed out here: $75, $120, $275, $30. Hope I didn't miss one. Let's see. Nice. Paydate is really helpful specifically for these recurring expenses. Not essential. If you don't have one on here, or you don't remember, or don't want to take the time to do it, you don't have to. But I really like it because when you're looking at, and I'll get to this, but ideally you have a separate account for all of your recurring expenses, because that way you can just put in how much you need for recurring expenses and know exactly how much is going to come out. But regardless, it's always nice to just be able to look at the balance of, let's say, your recurring account, or if you don't have a separate account for this yet, to just know what expenses are coming out and when. 7th and 11th. 11th. Your recurring expenses will add up add everything up, and it'll show you right here how much you pay for in recurring expenses. If you have something like Amazon Prime that you pay for yearly, you can put that here. And maybe I think it's like $140. And you can put the exact date that you started or that you pay for it. And if you have any upcoming expenses, that's the last thing, like a New York City trip. And maybe you've got $750 that you estimate you'll need for that, and you're going on September 23rd. So, but primarily, big group wise, you have recurring expenses. Next is your needs. Needs and fun. So needs is everything else you need that you don't pay for on a consistent basis the way that you do for recurring expenses. So the biggest examples are food and gas. Again, food you pay for every month, but it's not like routine in the same exact amount coming out automatically from your bank account. So for this, you can just estimate how much you need for food every month. Gas, maybe it takes you $40 to fill up your tank, and you fill up twice a month. So it's $80 for gas. And then a miscellaneous group. This is for, again, stuff that you need, but it will change from month to month. And this is just a an estimate at first. You can always come back and edit these amounts as you get more information, or if you go back into your checking account and you look through and add up how much you spent for food or gas or other miscellaneous stuff, you can change it at any time. So just start with an estimate. Maybe it's $100. This covers, toothpaste, if you get the occasional haircut, other paper towels, other things for your household. That's what you'd use your needs account for. Again, ideally, and I'll get to this in a bit, you have a separate account just for needs. For fun, this is a bit of a misnomer. You don't have to use it for fun purchases, but it's your guilt-free spending account. So this is, again, you can just make an estimate. We'll say $200. Change it if it's, ideally you have a separate account. Ideally you have 3 checking accounts: recurring, needs, and fun. In practice, you only carry around 2 debit cards. You can have credit cards, but that's sort of a separate conversation. But you should have, when you're out and about and needing to spend money, 1 card for needs, 1 card for wants. Recurring is separate. You don't have to carry that card around because you just keep it at home. And if you add a new subscription, you have that card there to enter the number in. But for fun, if you're just out and about, you want to go to the movies, or you want to buy a new shirt that you don't actually need, it's truly a fun purchase, or a new pair of shoes or something like that. That's what your fun account is for. Expenses, this box here adds up recurring, needs, and fun. Your income is pulled from the first tab, and it shows you your strategic money, which is what your income minus expenses gives you. Strategic money is the money that you're going to use to level up your life, to achieve your goals faster. And you can, of course, limit your expenses. You could reduce your fun money, and you'll see that the strategic money bumps up. But for now, let's just leave it at this. Other examples of strategic money: paying off credit cards, high interest credit cards, building an emergency fund, buying courses, investing in a coach, using some of this money to start a business. This is what strategic money is used for. Next is your assets and liabilities, which gives you your net worth when you subtract assets minus liabilities. Assets are things you own, like your cash and investments. So here you'll put in your bank accounts. Let's say you've got Capital One checking, Ally checking, Capital One savings, and Ally savings. If you're not familiar with Ally, it's an online-only bank that I like quite a lot. Just something to keep in mind. I think I'll probably make a separate video on great banks that I use, or how to think about finding a great bank. Let's see, you've got $1,500 in your first checking account, $400 in your second, and $500 in each of your savings accounts. For investments, you've got a 401k, perhaps. We'll say the balance is $12,000, and I'm going to put in here car in parentheses, in quotes. Car is not an investment in the classic sense. It actually loses value the longer you have it, but it is an asset in the sense that if you really needed to sell it, you could get cash for it, in theory, if it's a decent car. So we'll say $15,000, which is the estimated amount that you can actually get for it if you decided to sell it. Total assets adds up all this together, $29,900. Really? Oh, the 400 there. Let's just put 500, make it nice and even. All right, debt. So let's say that you've got a Capital One credit card, and the rate on that is the interest rate that you pay on unpaid balances. We'll say it's $2,500. And let's say you've got a Capital One car loan, and maybe you have $11,000 left on the loan. It's a 7% rate. Total liabilities, $13,500. So your net worth is assets minus liabilities equals $16,500. Once again, this appears on your dashboard. You can see your income, your expenses, assets, liabilities, your strategic money, which is your income minus your expenses, net worth, which is your assets minus your liabilities, and lastly is your goals. By the way, you don't have to use a net worth tracker, but it's nice if at the end of every month you update these numbers and then come in here to, let's say, July and mark 16,500. Maybe the month before was 16,000. All right, so for your goals, let's say that you want to pay off your credit card. Maybe there's I don't remember what we had for the balances. I'll just use that as a quick example. $3,000 on the credit card, $500 that you've paid off already. Maybe you want to build a 3-month emergency fund. And that's an emergency fund is what you'll use to, if you have car trouble and you need to make a repair or something with your home, an unexpected health expense, or if you lose your job and need to actually live on that money. So you can have a 6-month or a 9-month, 12-month emergency fund if you really wanted to. But let's say for now, it is, you don't have to be some sort of expert with Google Sheets, but I'm just doing a quick formula here to say 3 times your living expenses. So here's your expenses. I'm going to say times 3. So let's say you want $7,830 for your 3-month emergency fund. You have $500 already set aside in a savings account for it. And that would be your second goal. For your third one, trip to New York City in September. $750. Maybe you've contributed $200 towards it already. And let's say that your number one goal, which I like to keep on the dashboard just to keep you sort of, keep it like top of mind. Maybe you really want to pay off your credit card, but you're really looking forward to this New York City trip and for NYC trip, and that's kind of your main focus right now. Cool. This is your dashboard.